Hello, welcome to a Level 2 podcast focusing on basic accounting. My name is Gareth. I'm the Managing Director of First Intuition. First Intuition won the UK Accountancy College of the Year in both 2010 and 2012. I was really proud to win the UK Lecturer of the Year for 2011. And we were more recently nominated for Study Resource of the Year for 2013. The purpose of these podcasts is to focus on a typical problem area in some of the key papers through the AAT syllabus. Over the last couple of years, through the assessment process that students have undertaken, the AAT have been able to gather a lot of details about which tasks students tend to find most difficult. And so these podcasts will try and pick up on some of those tasks and hopefully give you a bit of an idea as to how to approach them. Well, let's look at an example of one of these problem areas from the Basic Accounting syllabuses. And in fact, this is relevant to both Basic Accounting 1 and Basic Accounting 2. Both often involve transactions dealing with VAT, value added tax. And particularly the area that students often find quite tough to deal with is VAT when we've got discounts, and particularly when we've got two types of discounts, trade discounts and settlement discounts. Now, it's very important in the basic accounting syllabuses that you are competent at dealing with VAT. Quite a wide number of the tasks you're likely to face will involve VAT. Even tasks that don't at first glance appear to be about value-added tax will often incorporate VAT in the calculations. You can imagine whether you're looking at sales to customers, you'll be dealing with VAT. If you're looking at purchases from suppliers, you'll be dealing with VAT. Whether you're dealing with credit transactions or cash transactions, those transactions will probably need VAT. So it is very important for many of the tasks in the assessments that you are competent with this area. Now, the particular complication is if we do have two types of discounts. Trade discounts, or sometimes referred to as bulk discounts. Now, trade discounts are discounts perhaps offered to regular, very good customers that purchase a lot from us, and as a result, try and encourage them to continue purchasing from us. We will give them a discount to make it cheaper for them. And often we also have early settlement discounts. It's very common in business that organisations give credit to their customers and allow them maybe 30 days before they have to pay their invoices. That does negatively affect the cash flow of the organisation. Obviously, you've got to wait 30 days to receive the money. And there are a lot of advantages in business to getting the cash flow quicker. And so by offering an early settlement discount, we can perhaps encourage the customer to pay perhaps within 7 days rather than in 30 days. Now, the treatment of trade discounts and settlement discounts is a little bit different when we're viewing the invoices. The net value of an invoice, now when we talk about the net value, we mean excluding any VAT at that point. So the net value of an invoice is calculated after deducting trade discounts only. The reason for that is that at the point of the invoice, you know that the customer is going to get the trade discount. You know that they're a regular good customer, or you know that they're ordering a large amount of units to qualify for a bulk trade discount. So when you are drawing up the invoice for the customer, you know they're definitely going to get the trade discount. But at that point, we don't know if they're going to settle early. We'll be sending out the invoice, and invoice is a demand for payment. We'll be perhaps offering credit of 30 days. And even if we have an early settlement discount offered to the customer, we don't at this stage know if they're going to take up that settlement discount. We'll have to wait till they pay to see if they've paid early or not. So we can't deduct the early settlement discount from the invoice because we don't know if they're going to take it at that point. However, the rule with VAT is that when you're calculating the value-added tax on the invoice, this is deducting all available discounts. So when you're working out the VAT, you need to work out a fully discounted value of the invoice after knocking off not just the trade discounts, but also any available early settlement discounts. Now, the problem that can create is at that stage you don't actually know if the customer is going to take up the early settlement discount, but we still deduct it for the purposes of calculating the VAT. Well, let me show you how that would work with a simple example here. So let's say that Megan purchases 50 units of a product from Lilly Limited at a list price of £5 per unit. Megan is a good regular customer of Lilly Limited, so she receives a trade discount of 5% on all of her purchases. Now that basically means she's not going to pay the full list price. She's not going to pay £5 per unit. She immediately gets a 5% discount on that. We're also told that in order to speed up payment by customers, Lilly Limited offers a 2% early settlement discount if the customers were to pay within 7 days rather than taking the full normal credit period of 30 days. Now, when we invoice customers, at that point, we won't know if they're going to settle early or not, remember? Now, we're being asked to calculate the gross value of the invoice that Megan will receive. And when we talk about gross value means including VAT. So, relatively simple little situation here of Megan making a purchase, and we need to draw up the gross value of the invoice. Well, let's look at how we'd work a solution to this example. So let's imagine we're drawing up the invoice for Megan. Now, the full list value of the invoice, well, Megan has purchased 50 units. The list price of each unit is £5. So that would be £250 as the full list price of the invoice. However, remember, Megan is a good customer. She's going to get a trade discount. Effectively, she's not actually going to pay the full £5 per unit. When we talk about the list price, that would be the price charged to any new customer that maybe only comes in and buys a handful of units, but because Megan's a good regular customer, she gets the immediate trade discount. Now, to show the working of that trade discount, if I take the full list value of £250, multiply that, now the trade discount that she was offered was 5%. So if I take £250 times, and I'll multiply by 0.05, which is 5% in decimal form, or the other way you can do it is if you take £250 and multiply by 5 and then divide by 100 to turn it into a percentage, I'm thinking that the trade discount will be £12.50. Now, we know that Megan's a good customer, so we know that she's definitely going to get that trade discount. So we can already knock that off the value of the invoice. So the net value of the invoice would actually be £237.50. We will not be charging the full £5 per unit. We immediately know that Megan's going to get this discount. That's the net value of the invoice, excluding VAT. So we now need to consider what the value added tax would be, and this is the bit you've got to be very careful about. Now, VAT standard rate in the UK at the moment is 20%, so we're going to be taking 20%. The mistake, though, that students tend to make is they work the 20% out on the net value of the invoice, the £237.50. But remember, the rule with VAT is that VAT is calculated after deducting all available discounts, not just trade discounts, but also any settlement discounts. Now, this means I'm not going to work the VAT out based on the £237.50, because that's only after deducting the trade discount. Remember, at this point, we don't know if the customer's going to settle early. So to work out the VAT, I need to actually work out, and it's what I call the fully discounted value. That £237.50 is not the fully discounted value, because that's only after the trade discount. So what I'm going to do is I'll show working. If I take £237.50, now the available settlement discount was 2%. So if you take £237.50 on your calculator, multiply by 2%, or multiply by 0.02 perhaps, that gives me £4.75 as the available settlement discount. So if I was to knock that off the £237.50, so if we knock off £4.75, this gives me what I call this fully discounted value, which is actually £232.75. Now remember, that's not what I'm going to be invoicing the customer. We're invoicing the customer a net value of £237.50, because at this stage we don't know if they're going to settle early. We don't know if they're going to take that £4.75 settlement discount, but the VAT is calculated after deducting it. That's the rule, that's the legislation. So if I now take £232.75, my fully discounted value, multiply by 20% or multiply by 0.2, I get a VAT figure of £46.55. That's 20% of the fully discounted value of £232.75. Now if I then add the VAT figure on to the net value of the invoice, £237.50, add on the £46.55, I get a full gross value of the invoice of £284.05. Now one thing to be aware of, and this is where sometimes students get confused, is obviously the VAT we've calculated is not 20% of the net value of the invoice. So often it's a situation where students think it's wrong, but it's not. Because remember, the invoice value is only after deducting the trade discount, whereas the VAT is calculated deducting all available discounts, including the settlement discount. So I get a gross value of £284.05. Now perhaps to check that you followed my explanation there, if I tidy this up, what might not be a bad idea is if you put my work into one side there, look at the example again and actually try and rework it from scratch on a blank piece of paper, see if you can get to that same gross value of the invoice, see if you can work through the logic of how the VAT works when you've got these two discounts, because it is an area that the AET have found often trips students up. Well, I do hope you found that useful, just looking in a bit of detail at one relatively small area of the basic accounting syllabuses at level 2. We will be doing further podcasts like this on other areas, but if you have any particular questions, do feel free to get in touch. So my name is Gareth, and my email is garethjohn@fi.co.uk. Thanks for your attention.